Good morning, dear investors. Welcome to Tip of the Day. I'm Maggie from Homely, Malaysia. From the last session, we know that we must get the license before driving. So today, let's talk about if there is any rules in stock market. If don't have, then how's the winner gain profits in the market? And if have, then is it easy for us to master? So maybe all of you have kind of this feeling that sometimes it looks some rules in the shares. For example, like this chart, like this trend. And this trend could possibly is sideways. If you buy a relative low price and then sell in a relative high point, then every time you will make profit. So after we know these rules and then we operate, then of course we always make money. So for example, if you buy at this place and then you sell at this place, then you make a profit. So according to the rules, maybe you will also sell at this place. And then if you sell at this and you will find the price will break away from this sideway and increase sharply. And then we miss the bull shares. So is there any real and simple rules in the market? The answer, of course, is right. But what is the rules? So actually, the rules was founded and created 100 years ago by Charles Dow, named Dow theory. Charles Dow was also the owner of the Dow Jones News Company. It is considered by many the foundation of tactical analysis. Dow creates the Dow Jones Industry Index and the Dow Jones Real Index when he was an editor in Wall Street Daily Press. He finds and published the concept of trend when he observed the movement of Dow Jones Industry Index, and then he find different level of trends in the progress, and he made the conclusion of this price into three trends: long-term trend, medium-term trend, and short-term trend. The primary trend, it is also called general trend. It lasts more than 1 year or several years. Most of shares rise or fall with the market. The range usually exceeds 20%. This is also called bull market or bear market. If the long takes advantage of the market, most of investors would make profits easily. So if you want to make money, then invest in bull market. Secondary market, which is also called medium-term trend. Its direction is opposite to the primary trend. The duration is more than 3 weeks and the range is 1/3 or 2/3 of the primary trend. So in long market, the profits in secondary rebounds of bear market is small. It can only be caught by few investors, while hard to most investors. Short-term trend, also called minor trend. It only reflects the short-term trend of shares. Duration lasts for only 6 to 10 days, so there is no need to do much analysis. So for the above, we find that the primary trend decides the medium-term trend, and the medium-term trend decides the short-term trend. This source is concluded as the most basic, also most important Dow theory in stock market. As the development of tactical analysis, Dow theory is known by many investors but still cannot put it into practice comfortable. So today we will introduce you a simple but very useful method so that you can distinguish these trends faster and easily. So this is the special indicator I will introduce you in the Homilychart, Homely Rainbow. Okay, let me give you a brief introduction about Homilychart first. So Homilychart is developed by Homely Software Corporation in 2013. Okay, it is a mobile device product expressly designed to investors who need mobile device investments. It is the simple version of Homely software which include traditional and Homely special functions. You can check the real-time chart of index sectors. Individual shares of Southeast Asia markets like Malaysia, Singapore, Hong Kong, Indonesia, and Thailand market. Besides, you can also check the real-time chart of forex and precious metal market. The most special characteristic of it is you can check shares with some homely surface special indicators which help us analyze and make an entry point and exit point decision. Let's take a view of the basic theory of Homely Rainbow. So Homely Rainbow is designed based on moving average theory combining with volume and time. Homely Rainbow can catch according to statistic principle of linear regression method. Homely Rainbow calculated them and made it can be shown as different group color lines so that can help investor make a judgment when trading. The largest characteristic of Homely Rainbow is to trace the cost price of different period time. It is suitable for the trend analysis of index and the trace of strong and bull shares. So while in consolidation, investors should be cautious to use this indicator. We can apply the division of trend level of Dow theory to Homely Rainbow. So let's take a look about the combination of Homely Rainbow. You will find there are 4 groups of different color lines here, okay, and each represent different period times cost price. So you can see the white line means the cost price of long-term trend investors. The blue lines means the cost price of medium-term trend investors, and the yellow lines means the cost price of medium-term trend investors. The red lines means the cost price of short-term traders. And there is also a green line which you can see is the fourth line of the red lines. We also call it lifeline. It means if the price stand above the lifeline, means their shares can be operated. And if the price is decreased, is below the lifeline, means you don't. It's better for you to keep away. And then let's see the basic practical usage of Homely Rainbow. It have it can tell us easily if the market is uptrend or downtrend by the order of the lines. It also show us their resistance of support because each line represents different period times resistant lines or support lines. The line gathering means the important changing point of the market of the price. Each group of line will have a cross, okay, golden cross and dead cross. It means it's the beginning of each of the trends, so it can help us doing the make the buy point and the sell point decision. Okay, let's look it in the chart. Let's take a look at the Homilychart in Homely WinPad version. This is the home page of the Homilychart WinPad. You can choose a market from here. You can switch market to Malaysia or Singapore. Okay, depends on you. And then when you choose the market, and then you can take a look at the index of each market. For example, here I choose the Singapore market, and then it shows the index of Singapore. Okay, so you can call out Homely Rainbow from their bottom indicator areas. Okay, there is 2 symbol here. C means common indicators, which you can see many common indicators in the market. And then there is a H means Homely indicators, which you can use the Homely special indicators from here. So you click H from here, and then you will find the Homely Rainbow here. This is Homely Rainbow. Then you click, and then the rainbow will come out here, will come out here. So now you will find, okay, each group of lines, and you can see, okay, now the white line is stand above, okay, the white line is in the topest, and then the blue line, and then yellow line, and the red line. Means the order of these lines means the market, the direction of the market is downtrend, okay, it's downtrend. So at this time, so it's a downtrend. And then, okay, you can also call out the volume in the second window, okay, because you can put two indicators in the screen. Then you choose the volume from the common indicator. The second indicator is volume. You call it out here, and then you combine to check to verify their buy or sell point of Homilychart rainbow. Okay, so you will find, okay, if the lines, okay, the price will get resistance, okay, in downtrend market, in downtrends, the price will the lines have strong resistance for the price. So for example, the first one, okay, you see the price get strong resistance by the yellow lines, okay, means in the middle short term, the price, okay, the index has strong, okay, the index reach resistance by the middle short term, okay, strong resistance. And then next time we will see the price gets resistance, meets resistance in the blue lines, means in middle long term the price get resistance. And then, okay, here the price get resistance by the red lines, okay, means the price get resistance in the short term area. So at this time, is every time when you get resistance by the lines is your time to cut loss or empty your position. And let's take a look at the index of home of Malaysia, KLCI. Okay, you will also see the lines, the order of the line. Okay, the first one is white lines, and then blue lines, then yellow lines, and the red lines means also, okay, the direction is also bear market, is downtrend. But the lucky thing is that, okay, now the lines keep gathering, okay, the lines keep gathering. Okay, when the lines gathering means there is an important changing point here. So we need to pay close attention to their direction after it break through. Maybe it will choose uptrend, and maybe it choose downtrend. So we need to pay close attention to it, and then make a good position, make a good decision. Okay, so before it gathering, you will see that the price get resistance by their yellow lines here, in their medium short term yellow lines here, and here the price gets resistance, okay, get resistance by their white lines, means it is, okay, it influenced by their long term. And then here the prices keep sideways in the lines, because why? Because the lines is gathering here, so the price is just sideways, or it's okay, so means different period of investors are gathering here, so price enter the sideways. You need to pay attention, where will you go, which direction will you choose. Okay, so let's take a look of individual shares here. Okay, P and A, these shares you will find, okay, so these shares, okay, you should pay attention to direction, okay, direction of these shares. How to judge it? You pay attention to their, you look at the order of the lines, okay, okay, the white lines is below, okay, the stand below, okay, the white lines stand below, and then blue lines, then yellow lines, then red lines, means the direction of these shares is uptrend. It's uptrend. So it's very safe and stable for you to make profits. And then we will find, okay, in the uptrend market, the lines have strong support to the price. Okay, so you can see here, when the lines gathering here, when the lines gathering here, and the price is easy to get support and have another increase after it extended, after it breakthrough, after the lines breakthrough. So is your buy point. Okay, is your buy point here when the price breaks through the lines, break out the lines. Okay, and like these shares, like these shares in Malaysia, you will find also the order of the shares is the direction of the shares is uptrend, and you will find, okay, the price gets strong support by the lines here, by strong support by the yellow lines, and here also get strong support by the yellow lines, here also get support by the yellow lines. Means the price is influenced by the medium short term price, influenced is influenced by the medium short term trend. And okay, next one, and you will see, okay, the direction of this trade is also uptrend. Okay, uptrend. But before, okay, this area is uptrend. Before, you see, before it break out, okay, the lines is gathering in this area. All four groups of the lines gathering here. So we say when there are lines gathering means all different period of investors are gathering here. They're fighting to each other. So the price will have big change point here. So you need to pay attention if the price will break out or break down. If break out, okay, if the price break out the lines, then it's a buy point. Of course, in the opposite, if it break down the price and then you sell. Okay, so the prices break out the lines with their increase of the volume, okay, to verify, to double confirm. So you can enter the market. And this one, okay, is also uptrend, okay, before it's gathering. So you see, before it breaks through the lines, break out the lines is gathering, they accumulate the energy, okay, they accumulate the energy, and then they choose, okay, when the price break out the lines, and the market choose the uptrend. So you can enter the market. So okay, so if you are short-term traders, you can pay attention by the red lines. Okay, by the red lines, every time when the price break out the lines is the buy point, and every time it break down their red lines, it's a short-term sell point. And then if you are medium short-term, of course, then you pay attention to the yellow lines here, okay, every time. And we know that the shares, the lines have strong support and the resistance for the price. Okay, if in the uptrend, strong support, and then downtrend have strong resistance in the medium short term. So you can also buy and sell by this, okay, by taking the yellow lines. And then if you are medium long term traders, then you pay attention to the yellow lines, the blue lines. Every time when the price break out the blue lines, then you can buy. When you break down, you can sell. And when the blue line gathering, when the blue lines gathering, then is medium long term important changing point, and changing point. Okay, changing point. Okay, and then if you're long-term investors, so you just pay attention to the white lines. Okay, when the white line is gathering, okay, in uptrend, the price gets strong support by the white line in long term. Okay, in downtrend, it has strong resistance by the white lines. And every time when the price break out the white lines, is your long-term buy point. When you break down their lines, is your long-term sell point. Okay, but when we really trade in the market, okay, how to say, it's better for us to follow the market. Okay, the best method for us is to follow the market. It's better for us to follow the market. How to say? Because one shares, maybe the rules of each shares, the rules of each shares may be changed. For example, at first time, maybe at some period of time, the price will influenced by the okay at the beginning of a bull shares, maybe the price influenced by the red lines, and then he will break out continuously. There are yellow line groups, and then the blue line groups, and then white line groups. So once you see it break out successfully, then you can change your how to say, you can change your strategy from short-term trader to long-term trader. So it depends on you. Okay, and then you will always use, you can combine other indicators like volume, like red and green signal, or multicolor dragon, to combine to confirm their buy and sell point. So hope today's session will help you in the market. And this is what we talk about, the rules in the market. And the goal of our lecture is want to tell us more basic rules of their market, and then make you have a good profits in the market. So that's all for today, and see you next time. And I hope you make a good investment in the market. Thank you very much. Thank you very much, and have a nice day.